This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Asian stocks are set for early losses as Nvidia's results and outlook fail to inspire investors. Renewed volatility gripping Wall Street in the lead-up. The company that's led the AI boom sliding in late trade after a forecast below the highest expectations and questions over its new Blackwell chips. We'll be hearing exclusively from the CEO, Jensen Huang. Also ahead, more earnings in focus. A big profit jump for China's top-selling car maker BYD, while rival Li Auto misses estimates. Plus, as Seven & I faces what could be Japan's largest foreign takeover, we'll be speaking with the chief of a key government trade agency.
Take a look at how U.S. futures are coming online. We had that pressure in the after-hour session. Of course, it was all about Nvidia sinking after those results. But you really have to put it into perspective because second quarter revenue beat estimates, third quarter revenue forecast beat estimates. But the thing was that they didn't beat by enough. So we had a lot of skepticism about AI investment right now and really sort of a disappointing earnings season for the Magnificent Seven. So we're seeing that downside pressure in the after-hour session. We're watching the Treasury space as well. We had yields rising and the dollar rising on the back of that. Take a look at how Asian markets are setting up because we had the Japanese yen also on the other side of that trade under pressure. Not to mention that we have comments from a top BOJ official talking about market moves being really in focus when it comes to deciding on the next rate hike. So we had that perhaps a little bit commentary that was received as dovish, really pressuring the Japanese yen in the overnight session as well. Nikkei futures pointing to the downside, but in the Asian session, it will really be about what happens to those chip stocks. Of course, we have Tokyo Electron in Japan. We have SK Hynix in South Korea. The Korean market has been unchanged for a while this week, Haidi, but we'll be watching those semiconductors very closely.
Yeah, absolutely. Shery, let's get some more reaction when it comes to Nvidia's earnings. I want to bring out Bloomberg technology co-anchor Ed Ludlow. And just in the last few minutes or so, you were speaking with Jensen Huang. All I heard was sort of positivity and good things going into the near term.
Yeah, and I think Huang's comments are kind of consistent with the broader story that the demand for its products is intact. This investment cycle for AI is continuing. There were some specifics around its next-gen product, Blackwell, which we can get into. But I think that he's sticking with it, this big picture forecast, particularly for next year. Listen to this.
What can you tell us about the Blackwell chips? Because, of course, there were concerns that they would get delayed, that there were some disruptions. Did we get any more clarity?
Yeah, basically, the market just wanted more. Right, there'd been all this reporting that there was a fundamental design issue with Blackwell. It has a very unique dual die design, and they came out with it and said this is not a design issue, but the production process did face an issue which we've resolved. They gave us some financial figures, a guide that there would be several $1 billion of revenue from Blackwell in the fiscal fourth quarter. And it's just expectations are so high. You guys know the stock story around Nvidia, and they just wanted more granular detail on that.
We're going to have lots and lots of supply, and we will be able to ramp starting in Q4. We have billions of dollars of revenues, and we'll ramp from there into Q1, into Q2, and through next year. We're going to have a great next year as well.
You know, I don't think we go as far as to say, Haidi and Shery, that's fighting talk. But at the beginning of the interview, I don't know if you guys noticed, I put the kind of Blackwell criticism of the market to him, and Jensen Huang almost paused. He stopped and was like, well, I thought I'd done a pretty good job of explaining what's going on. But again, the expectations of this market are so high for a name that has occupied 99% of the market so far.
Lofty and unsustainable expectations is how Bloomberg Intelligence puts it, right? Is that sort of really the case, that they were, I guess, almost set up to disappoint, given how used to, beat after beat after beat from this company by this market?
Yeah, the overall beat relative to consensus in this quarter gone was 4 percentage points, I think 4.1%, which is the slimmest beat they've had in 6 quarters. Now, they beat every quarter, but it's kind of getting closer and closer to estimates, which is an interesting trend to follow. I think that the principal question is this. for a long time, they had 5 customers that was driving all of this. It was the hyperscalers or cloud providers and Meta, the parent of Facebook. But actually, they were at pains, not just during the interview with Jensen Huang, but on the call as well, to say, actually, we do business with a lot of other entities now. And that the demand for what they call accelerated computing, but basically data center capacity for training AI models, is moving beyond that. And they are at least combative on that point, that it is becoming broader than just a few select names.
What indication did we get in terms of supply next year? And not to mention Nvidia's own suppliers, of course, will be watching those stocks in the Asian session.
Without flattering myself, I think that was probably the most important part of the interview, or what came out of the interview. He was pretty clear they're supply constrained in the sense that they're ramping a product in Blackwell and the demand for that product is greater than their ability to supply. But he was also explicit that supply in fiscal fourth is better than fiscal third, and going into the next fiscal year, fiscal 26, it will improve sequentially and get greater and greater. And I think that's probably Jensen Huang's way of saying supply is improving. You know, they rely on TSMC as a contract manufacturer, but they have the leverage and scale to go to TSMC and say, we need more of this and we need it quicker.
Our Bloomberg technology co-anchor Ed Ludlow there will be sort of mulling what we heard from that interview with the Nvidia CEO Jensen Huang throughout the course of the trading day. But let's get some analysis now from Kyle Rodda, who's a senior market analyst at capital.com. And really nice to see you in person for a change, Kyle. Is it possible that this is just a blip in the AI boom? We've seen, about 10% for Nvidia below the June peak. Do you think that it sort of from here regains its mojo?
I think it's just the end of the hype cycle. I mean, I suppose if you look back, 3 or 4 months ago, and it's always easy to see these things in hindsight, when you have the CEO of a major company, signing the blouses of women as if, at the backstage at a Motley Crue concert, you start to think that maybe there's a bit of a mania in the market, that maybe, price is just being driven by momentum, narrative and hype. And over the last couple of months, we've seen price come back. We've seen still the company deliver fantastic performance. There's a little bit of doubt over, AI investment from their biggest customers, these other Mag 7 stocks. And we're at a situation now where, after a couple of years of upside surprises where, it's very, very difficult to predict the outlook for earnings, really on the basis that the distribution of outcomes are so significant that, you get these kind of very, very significant, upside shocks. We're now in a situation where the stock is richly valued again on a price to sales basis. It doesn't like being up here that much. It's sort of 40 to 1. We've also got market sentiment just moderating a little bit, and now investors have a pretty good feel of what drives the company's fundamentals. And again, the sentiment hype train is just kind of, slowed down a little bit. So, I think Nvidia is probably in the future still a fantastic prospect. In the very short term, the factors or tailwinds are still very significant. We're just now talking about it like it's a normal stock, asking about whether this is an appropriate risk to take at this price for this company or not. And the markets will start thinking about it that way rather than this big momentum trade, this big hype mania.
What's really not been normal, and I think we sort of tried to make historical comparisons perhaps to Cisco during .com, but this one company, one stock just lifting all boats, particularly across tech. And it takes us to the MLive blog question of the day, which is there a replacement? Is there a potential, something else, a thematic, a sector, a story that can replace Nvidia as a broader kind of market driver, particularly as you say that, the outlook for global equities is broadly more challenging now? Yeah,
I mean, as you noted, the 3 big factors around this story and why it's spread so much through the market is this AI investment boom more broadly, which is a big part of America's macro story and our performance. Clearly what it says about AI investment from the big Mag 7 tech names and how it could potentially drive their future growth. And then the fact that now we've got a $3 trillion company that just by virtue of its own results can shift the market, that's going to be a really big shifter of market sentiment on a day-to-day basis, and a story about flow and momentum, almost self-perpetuating. I think if we were to see a shift in the market dynamics which more or less takes the leadership or the story away from Nvidia and move it towards something that's a little bit more sustainable now, it would be a broadening out of the equity market rally, which would really have to come from this sort of soft landing narrative, this sort of progressive rate cuts, disinflation and a stable labour market, where companies which have more or less underperformed because we've seen such narrow breadth and strength really isolated around Nvidia, and then below that the Mag 7 stocks, a market that is much more firmly entrenched in fundamentals, macroeconomic fundamentals, and a solid earnings growth. So the other 493 stocks in the S&P 500 can participate in the rally. So I think that's really what that shift would have to be. It goes back to the macro, that sort of interest rate cut story and a soft landing.
Is that your base case?
It is at the moment, yeah. We've got a really interesting dynamic going into September where I think the September Fed funds futures contract implying a sort of 70-30 split between a 25 and 50 basis point move. That's like a live poll effectively on whether we get a soft landing or a hard landing. At the moment, the markets, wherever you look, are basically pricing in a soft landing, and at the moment that looks likely. Of course, that's all going to depend on that August jobs print, so we'll have to wait and see for that.
How much more leeway does that give central banks here across Asia? We heard from a top BOJ official talking about having to still watch market volatility for any moves to come.
Yeah, certainly. And I mean, I think we're still seeing technicals a little bit out of whack in the market after the August kind of meltdown we saw. And, there was an element of, fundamental impetus behind that, the BOJ rate hike, as well as that softer than expected US jobs print, which again goes back to how important this August NFPs will be. But if you look at the price action recently, it's been incredibly whippy. We've seen a reversion in equities, a dump in the US dollar on the basis of these rate cut expectations, and things are getting very stretched in both directions. So, I mean, we can talk about obviously fundamentals a lot, and the central banks being more or less the catalyst behind these moves in the market and the source of volatility. But the fuel now is just the fact that we're entering a very seasonally weak period right across the globe. We're seeing a very patchwork global economy and a convergence with the US economy with the rest of the world. That's the kind of stuff that's going to continue to drive this probably period of volatility, especially going into the US election and towards the end of the year.
Yeah, September is supposed to be one of the worst months of the year for stocks, right? But when it comes to Asian equities, any fundamentals that could support it in any region? I know we've been talking about that and valuations a lot here in Japan.
Yeah, I mean, well, if we pick it apart by region or by country, the Japanese story still seems a little bit weak for me, especially notwithstanding probably a tactical trade to the upside for the US dollar, which looks a little bit oversold and positioning looks a little bit rich. The economy there is really out of step with the rest of the world. Obviously, the BOJ's hiking cycle is out of step with the rest of the world. Stronger yen, weaker global growth, not great for Japanese equities. So I think those factors will continue to weigh on that part of the market. The really big variable is what happens with China and whether they feel that they have greater pressure, whether it be for social reasons or simply because of a decreased likelihood of hitting that about 5% growth target, that they'll need to increase stimulus, which is sort of lacking. That area of the market is undervalued, but we're lacking kind of those fundamental reasons to buy into it and take advantage of those attractive valuations. So that's where really the swing factor is going to be. Otherwise, it looks like a fairly tepid global growth story, and I think that means that, again, without further support from China, it's going to be an underperforming region in global equities.
And yet Australia continues to sort of outperform, but also see some resilience on the macro side, right? Particularly as we've heard from the big miners kind of saying that their exposure to that China slowdown story has been managed. Yeah,
I mean, it has been a little bit surprising. And, the old rule of thumb is that you do buy the miners when, their multiples are low. We start to get to the bottom of a commodity cycle. So there is sort of hope that perhaps that can be an area that potentially bolsters the market from here. I'm a little bit sceptical on that just because of the absence of any kind of stimulus coming out of China. And then also as well, if you look at where the miners are pivoting as to some of these kind of, battery metals, battery minerals, that kind of trade, they're not looking so positive on the basis that, again, there's that China story, but there's also the slowdown potentially in spending from the United States government in these sort of post-Inflation Reduction Act kind of years. So I'm a little bit sceptical. I think the ASX 200 will continue to outperform its US counterparts. If you look at other areas of the market, the banks and the domestic sensitive sectors perform better because apparently the consumer isn't as in such a dire position as we expected in Australia, but still very, very rich, relatively speaking. And it's difficult to see with our makeup of our market, where some of those major weighted sectors are sort of valued at the moment, that we'll see a level of outperformance compared to Wall Street. And probably the biggest tailwind will be if we get a soft landing in the US economy, global financial conditions embrace that and sentiment picks up, and we just basically follow in the slipstream of US markets.
Sounds good. Kyle, great to have you with us. Kyle Rodda, Senior Market Analyst at Capital.com. Coming up on the Asia Trade, we'll take a look at the outlook when it comes to global chips, that cycle there with Futurum Group and Standard Chartered Wealth Management as Nvidia's sales forecast disappoints some investors, plus the chair of Japan's external trade organisation will be along with us too. This is Bloomberg.
China and the U.S. say Presidents Xi and Biden will talk in the coming weeks. It follows the trip to Beijing by U.S. National Security Advisor Jake Sullivan as tensions simmer over a range of trade and geopolitical concerns. China correspondent Mingmin Lo joins us now in Hong Kong with the latest. Mingmin, any idea of the details of where, when these conversations could take place?
Well, these are very initial stages. We're just hearing that the two sides are discussing a possibility of this meeting, so we don't have an idea of where it will be. But bear in mind that President Biden is the only president after Jimmy Carter not to have traveled to Beijing during his time in office, even though he claims that he has spent more time with President Xi than any other leader, more than about 90 hours in total. So could this next meeting be his first and final trip to Beijing during his time in office? Or could it be on the sidelines of the G20 or the APEC summit in Peru later this year? Remember the last time they met on the sidelines of the APEC summit in San Francisco? That was a very consequential meeting. Even now, we still repeatedly hear the Chinese Foreign Ministry refer back to that meeting pretty often, saying that it is really that foundation of the two sides recommitting to stabilize relations, especially after the spy balloon incident. So I would say, a significant outcome that has come out of the marathon meetings over the past couple of days. Another significant outcome is that the two sides have agreed to deepen military-to-military communication down to the theater command level. And remember, this is something that Washington has been pushing for a long time. They see it as extremely critical to avert any sort of accidental crisis in flashpoints like the Taiwan Strait and the South China Sea as well.
Meanwhile, John Podesta, who's, of course, the US climate representative, is headed to Beijing next week.
Yes, this is one of the outcomes that have come out of those talks as well. Both China and the U.S. agreeing to cooperate more on climate change, as well as other areas like anti-narcotic drug enforcement, artificial intelligence. So Podesta will be traveling to Beijing to meet his Chinese counterpart, and the aim is to discuss how to reduce a range of greenhouse gas emissions beyond just carbon dioxide, and also to discuss that thorny issue of how to raise more funds for developing countries to help them combat climate change and to help with their energy transition. And obviously, China has been under pressure to contribute more despite their status as a developing nation. The two countries also looking to set new pledges for their climate goals by 2035. And again, China, as the largest carbon emitter, is expected to have more aggressive targets here. But to be fair, China has been making great strides on this front. They are expected to have already peaked carbon emissions, if not this year, then by the end of this decade, and their rapid transition to the adoption of electric vehicles, to solar energy and wind energy has been going a long way. And this timing of the meeting is very critical. Their meeting in the first week of September is just less than 3 months ahead of the key climate meeting, the COP29 in Azerbaijan, also just ahead of the U.S. elections, where we know there will be a lot of uncertainty if Trump takes over as president. We know he had withdrawn from the Paris Agreement the last time, so this time the two countries are looking to foster connections between non-state, non-governmental institutions to ensure that they can have a more sustainable cooperation that could outlast a change in the U.S. administration.
China correspondent Min Lo there. And staying with China, we've got more earnings results coming through, including in the EV and broader tech space. Anna Jewelers is taking a look at the details. So some big names, obviously everything's kind of being overshadowed by Nvidia today, but we have been looking ahead to BYD in particular.
Yeah, well, we had the results overnight, and actually they came in better than expected, and already the projections were pretty solid for BYD as well. But we saw net income rising 33%. We also saw revenue rising 26%, and importantly, quite a strong forecast for the company in terms of what we see for global overseas expansion. That was a really key one to watch. We had an interview with the Executive Vice President, Stella Lee, ahead of the numbers, and again, really questioning further about how much they see international sales contributing to the bottom line. They're actually expecting that to rise to around half of their total revenue in the coming years. We again, of course, asked what's your timeline for that. Didn't get any specific response on that, but certainly it does seem like BYD is pushing ahead with the international expansion plans, despite those tariff risks that are building with the extra duties being applied, at least in the EU, but also Canada and the US.
We saw huge pressure in the overnight session for Li Auto's ADRs. What's going on with that company?
Yeah, that's right. It was a slump of more than 15% on Wall Street trading. And really, of course, it's a reaction to the numbers that came through. This was not really a bright spot on the calendar at all. So Li Auto actually missed estimates. And what really played into it here was the overall impact that margin squeeze is having here, because the delivery numbers were okay. We saw them also giving their forecast for deliveries through to September, 155,000 vehicles. That was ahead of the analyst estimate of around 137,000 vehicles. So the deliveries are getting out there. They're expected to continue getting out there. What is really weighing, though, is the cost competition within China, and that is having an impact because they're selling more cars but for a lesser price tag. And again, it's all about margins that we're seeing really playing out across the auto industry in China.
We also had those numbers up from Meituan.
Yeah, this was an interesting one because we've been really seeing that trend coming across a lot of the consumer firms or consumer-facing firms in China, that weakness that's been showing up. Meituan actually did better here, and we saw them beating estimates, and that came down to the numbers we saw for its core business. That's the food delivery business within China. That rose a better than expected 19%, so the projection had been for 17% growth in that. Again, yesterday we were talking about the rise of Pinhao Fan. That's the group-based low-cost food delivery option, and it really does seem like they're having a bit of a win with that. They're also being able to draw in more merchants who could be attracted to that sort of model as well.
Our tech reporter Annabelle Jewelers there with the latest on the earnings season. Take a look at how we're looking here in Tokyo because, of course, we're headed towards the market opens, but it's a little bit cloudy. We do have Typhoon Shanshan barreling towards Japan's southern island of Kyushu. It's actually made already landfall in Kagoshima about half an hour ago. We know that some impact is already being seen by some companies. The airlines have canceled flights. Kyushu Railway say that it will suspend some bullet train services. And manufacturers, Toyota Motors, suspending operations at all 14 of its plants. So do watch out for some of those names in today's trading session. This is Bloomberg.
We're expecting Q3 to have more supply than Q2. We're expecting Q4 to have more supply than Q3, and we're expecting Q1 to have more supply than Q4. And so I think our supply condition going into next year will be a large improvement over this last year.
Nvidia CEO Jensen Huang there speaking to us exclusively. Of course, we have seen their earnings results, and it was really a beat in second quarter revenue. The third quarter revenue forecast also topped estimates, but the beat was not big enough for investors following this stock. Of course, expectations were pretty high, and we saw the smallest revenue beat in 6 quarters. So, Haidi, that didn't sit well for investors, and you can see right there the Asian chip stocks that we'll be watching as well as we go into the Asian trading session. Nvidia in the after-hour session seeing a lot of downside pressure.
Yeah, and the question that's being asked, and in fact it's our question of the day, is what can potentially replace Nvidia growth story as a major equities driver? We've tried to draw these correlations, comparing it to the way that we saw the market weighting of Cisco, for example, during the dot-com period. But, you know, these merely solid earnings are clear disappointment to investors who'd gotten quite used to the beat on expectations. It's been such a relentless driver when it comes to these broader equity gains. The question is whether they can sort of get back to where they were before. That June peak, we're down about 10% from that level. And the broader outlook for global as well as US equities looking a little bit more challenging these days. This is Bloomberg. Qantas has reported a full-year profit of $1.4 billion and a further on-market share buyback of up to $270 million. These numbers are broadly in line with expectations. The flag carrier continued to struggle with the fallout from multiple reputational crises. Bloomberg's Paul Allen joins us now. So how do you rate the headline numbers, I guess, first?
Yeah, the numbers were in line, as you say. Our profit was down 16% on year. There's not going to be a dividend. Qantas sees that coming back in the second half of 2025, though. Our revenue was actually up 11%, but fuel costs were up even more, eroding the profit. As for the outlook, those fuel costs are seen continuing to rise. Capacity, though, is seen rising as well, and Qantas sees travel demand and bookings remaining stable. But the real issue is around that reputational beating that Qantas has taken. They were, of course, found to have sacked 1,700 ground staff illegally during COVID. Once flights resumed, there was missing baggage, cancelled flights, and then, of course, the ghost flights scandal where Qantas was found to be selling seats on routes or flights that never even existed. So a lot of work to be done.
Yeah, I mean, really repairing reputational damage is a long-term commitment, right? So what is Qantas doing to address this?
Well, we have had a number of apologies from the CEO, Vanessa Hudson, over the course of the past few months, and she acknowledged today that there is more work to be done. Already pledged about $150 million to improve customer service, a reshore call centres back to Australia, undertake some other measures as well. But the brand took a beating. The brand finance rankings, they slid from 19th last year to 41st this year in terms of brand strength. I guess the question is, though, does it really matter? Because if we take a look at the share price, it's still up 4% on year. It has underperformed the ASX, but shareholders could still be reasonably happy with what's going on. And there was a very, very flattering column about Qantas's first class and business class services in the South China Morning Post this week as well. So obviously a bit of a PR campaign blitz going on somewhere. 13 buys on this stock, 0 holds as well. So when it comes to the bottom line, yes, the reputation has been damaged, but does the market seem to care? Perhaps not.
Bloomberg's Paul Allen there, and sticking with aviation, we're speaking later with the CEO of Qantas's regional rival, Air New Zealand, Greg Foran, joining us on Bloomberg Markets Asia on those times. On your screens right now, let's take a look at how we're setting up, and we are sort of bracing for that post-Nvidia slump ride with really, despite ultimately another great quarter, handily beating revenue estimates in the fiscal second, strong data center demand amongst other things, and obviously we heard from Jensen Huang just about half an hour earlier, really sounding positive when it comes to the supply side of things and the outlook going forward. But investors were disappointed ultimately, and we do see that playing through from the US session and carried through to here in Asia as well. Take a look at that downside that we see in futures trading, particularly when it comes to the Nikkei futures trading in Singapore down by 1%, and a lot of that sort of tech-heavy component in markets like Japan, like Korea as well, and Taiwan. When that comes online, we'll see the brunt of some of that pressure. S&P futures also off by about 0.7%. That sort of dampened outlook for tech stocks really is the big theme there, as investors were ultimately underwhelmed by the highly anticipated numbers out of Nvidia. We had some weakness really pointing to the China Open as well. The Nasdaq Golden Dragon China Index down by 3.6%. And take a look at some of the names that we will be kind of adjacently watching in the Asia session. Nvidia in the after hours off by over 7% still, and seeing weakness across the board when it likes of some of those other heavyweights like Taiwan Semi as well. So really broadly a question mark at this point when it comes to how much cooling we'll see further for the AI frenzy that's really transformed Nvidia into the world's not just the second most valuable company, but also just the most influential stock when it comes to these broader markets, Shery.
Yeah, with a market value of more than $3 trillion and worth more than the next 10 largest chip makers combined, we can really not overstate how important this stock is for the broader market. In an exclusive interview with Bloomberg, CEO of Nvidia, Jensen Huang, tried to ease investor concerns about its new Blackwell chips, saying that the firm is ramping up production of those semiconductors.
We made a mass change to improve the yield. Functionality of Blackwell is wonderful. We're sampling Blackwell all over the world today. We show people, giving tours to people of the Blackwell systems that we have up and running. You could find pictures of Blackwell systems all over the web. We have started volume production. Volume production will ship in Q4. Q4, we will have billions of dollars of Blackwell revenues, and we will ramp from there. We will ramp from there. The demand for Blackwell far exceeds its supply, of course, in the beginning, because the demand is so great. But we're going to have lots and lots of supply, and we will be able to ramp starting in Q4 We have billions of dollars of revenues, and we'll ramp from there into Q1, into Q2, and through next year. We're going to have a great next year as well.
Jensen, what is the demand for accelerated computing beyond the hyperscalers and Meta?
Hyperscalers represent about 45% of our total data center business. We're relatively diversified today. We have hyperscalers, we have internet service providers, we have sovereign AIs, we have industries, enterprises. So it's fairly diversified. Outside of hyperscalers is the other 55%. Now, the application use across all of that data center starts with accelerated computing. Accelerated computing does everything, of course, from the models, the things that we know about, which is generative AI, and that gets most of the attention. But at the core, we also do database processing, pre and post processing of data before you use it for generative AI, transcoding, scientific simulations, computer graphics, of course, image processing, of course. And so there's tons of applications that people use our accelerated computing for, and one of them is generative AI.
Nvidia CEO Jensen Huang there speaking exclusively to our Bloomberg technology co-anchor Ed Ludlow. Coming up next, we take a look at the outlook when it comes to Japanese exports. Ahead of a key government trade group will be joining us amid some of the yen volatility, tariff tensions between China and the West. This is Bloomberg.
We are bracing for Typhoon Shanshan to really pass through Japan. It's already made landfall in Kagoshima earlier today, but of course it's supposed to barrel through the island of Kyushu. We've already seen some disruptions, some manufacturers like Toyota Motors having to halt some factories, even affecting the election campaigning for the leadership of Japan's ruling Liberal Democratic Party. We'll be watching some of those names that have been affected, including those airlines, not to mention, of course, railway companies and electric power companies as well. Take a look at how futures are setting up for trading at the moment, because, of course, we are seeing some downside when it comes to the tech sector, given Nvidia's results. Disappointing investors, despite the fact that they beat on second quarter revenue, they beat on revenue forecast for the third quarter. But it was the beat, the size of the beat, the smallest revenue beat in 6 quarters that really investors focused on, not to mention some disruptions when it comes to their new Blackwell chips. But let's discuss the market environment and also what's happening across Japan, because we'll be watching very closely Tokyo Electron and some of those semiconductor names coming online in the supply side. We do have with us the Japan Trade Association. This is the largest trade organization that promotes trade and investment between Japan and the rest of the world, JETRO. Chairman and CEO Norihiko Ishiguro joins me here in the Tokyo studio despite the bad weather. So thank you so much for coming in.
Yeah, thank you, Shery.
Let's talk a little bit about the foreign investing environment here in Japan, because there has been so much focus, interest from overseas. What are some of the key trends that you're seeing in terms of the size of the interest, where the investments are coming from?
Okay. Yeah, recent years we have seen signs of the fragmentation in trade and investment flow because of the heightened tension between U.S. and China. And that's why still China is a very important market for Japan, but Japanese businesses increased interest in expanding their business in ASEAN, India, and Middle East rather than China. And on the other hand, looking at the investment, foreign direct investment in Japan, so lately, big, large-scale investment project of the semiconductor sector, including the TSMC and the Micron, have been announced one after another. And also the in the digital-related services, AWS and Google and Microsoft and Oracle, those big companies have announced large-scale data center investment project
Microsoft,
in Japan.
I think, was one of the latest ones to invest.
As I said, fragmentation of the global economy becomes more and more. So maybe investors interested in increasingly in Japan's stability of the Japan's and also the well-developed infrastructure.
So how about because of the cheaper Japanese yen as well? Are we seeing more interest from foreign companies? For example, the latest one was Couche-Tard, trying this, if it happens, the biggest foreign takeover of a Japanese company, Seven & I. But at the same time, we're seeing Seven & I trying to get government protection. Is this sort of mixed messaging when it comes to also your job having to promote these investments to come into the country?
Yeah. So as you said, thanks to the weak on the yen, foreign investors are interested in Japanese market. So not only Japan's stability, but also the weak yen is attractive for them. And that's why we promote foreign direct investment, M&A.
Will it make your job more challenging if we do see the government actually protecting these sort of takeovers from the likes of Couche-Tard? We have seen activist investors also wanting more value from some of these companies and assets. Depending on what happens here, could this be the litmus test of what Japan is actually prepared to do in terms of foreign-facing businesses?
So you mean investment control?
Yes.
Yeah, of course. So if the dual-use technology and those kind of the defense-related industry, we will check the such kind of the factors. But generally speaking, so we do not concern about that.
Yeah, because Seven & I, for example, operates convenience stores, but they want to be classified as a national security risk company.
Yeah, that's it. Yeah, national security related businesses, we have concern about that. But generally speaking, so we welcome the foreign investment.
Yeah, and the government says it wants an active market for desirable M&A transactions, right? But there is a question which I think, Shery was also sort of alluding to, is how far are they willing to go to open up this market to foreign investors? Do you think that is still a question mark at this point?
But
is there a question mark when it comes to foreign direct investments, given, of course, that the government is welcoming them, but at the same time, some of these companies don't want these investments, or takeovers at least?
But we'd like to promote foreign direct investment. And so we don't have any objection about that.
When it comes to these investments, as you said, the cheaper yen, is it making those flows in terms of what comes in and goes out, in terms of these business flows changing? What are you seeing in terms of trends?
Trend is so last year, so our foreign direct investment increased about 10%, and so it's a very favorable situation. Yeah.
You also mentioned, of course, the trade flows given the fragmentation of the world. Where do you see the investments going into the United States and from the United States, depending on what happens in the November presidential elections in the U.S.?
Yeah, I don't recognize that such an impact of the election. But maybe so Japanese businesses are very conscious about the result of the election.
Yeah, because a lot of Japanese companies have seen benefits, especially coming from the Inflation Reduction Act coming from the Biden administration. Are they sort of preparing for any changes on that front?
Maybe so. They wait and see the situation, I think. Yeah, of course. So related to the semiconductor sector, they are favorable to the current situation, and but of course, so situation might be changed, and that's why the Japanese businesses wait and see for a while, I think.
You mentioned also when it comes to semiconductors with TSMC investments here in Japan. Anything else that's on the pipeline?
Pipeline, okay. So, pipeline. Yeah, of course, not only the semiconductor, but also the as I said, data center, and also the AI businesses, and those kind of the digital-related industry will be welcomed.
Are you worried about more trade restrictions coming up, though?
Yeah, a little bit worried about that because, as I mentioned, so tension between U.S. and China heightened, and so that means export control and investment regulation might be strict.
How is JETRO trying to navigate that?
Yeah, we'd like to provide information to the Japanese businesses accurately.
When it comes to Japan, also acquiring talent is so important, right? Especially when you have changing demographics. How difficult has that been, especially highly skilled professionals, when earning in Japanese yen isn't right now what it used to be before?
Yeah, so working in Japan is not so attractive at the present moment. But so definitely we need highly skilled foreign professional because, as you mentioned, so demographically we are losing the working age generation, and that's why definitely we need highly skilled professional, foreign professional.
Anything that the government is trying to do right now
to
make that happen?
Now, taking the example, JETRO try to effort to the foreign students in Japan to introduce Japanese businesses, and we have a job fair or some kind of the show of the for the foreign students.
Norihiko Ishiguro, it was really good to have you with us, bracing for the typhoon. Thank you so much for coming in.
Thank you for having me.
Japan External Trade Organization Chairman and CEO joining us live here in the Tokyo studio. And of course, if you missed any part of that conversation, TV Go is your function. You can also dive into any of the securities or Bloomberg functions that we talk about and become part of the conversation. Do send us instant messages during our shows. This is for Bloomberg subscribers only. Check it out. TV Go. This is Bloomberg.
The head of the world's largest vaccine maker says governments need to invest early in health to protect their economies as well as their people. The Serum Institute of India CEO Ada Ponawala spoke to our colleague Haslinda Amin for the latest edition of Latitude.
I think a healthier population is always going to be a more productive population, and that's good for the economy, it's good for everything. I think it's common sense. It's just that sometimes the political will isn't there in some of these countries to prioritize. They want to do it, but they have these other priorities. So I hope that they can keep this as a priority, because a workforce that is 20 or 30% down during a pandemic or an outbreak, or is suffering from endemic disease in certain areas, there's certain diseases that keep spreading, is not healthy, it's not productive. And if you want everyone to perform at their best and you want healthcare costs to be down, you don't want to be burdened with insurance costs and other costs. I think it's important to invest early in health, in child health, in women's health, and I hope that continues both in India and other parts.
We know COVID took the world by surprise, and some say disease X is coming sooner than you expect. Is there a sense when disease X might hit the world
No, I'm not losing sleep over which day and when it's going to come out, but we're definitely prepared. We have a huge testing infrastructure in India, for example. We can detect now, new diseases that can come about, and if they're spreading, then, we can take action. We've got a huge vaccine and pharmaceutical industry in India. So India is very well, I think, poised. But when the crisis comes, we stick to what we've committed. I think that's important. So let's see what happens.
You can catch the full episode of Latitude with Hasinda Amin premiering today on Bloomberg Television at 8 p.m. Hong Kong. You can also watch it on our YouTube channel. And these are the stocks that we'll be watching when trade opens in Korea, Japan, and Australia very shortly. Do watch out for those stocks that could get hit from the typhoon approaching Japan. We're talking about airlines and railways. Typhoon Shanshan is barreling towards the coast. It's already made landfall in Kagoshima. Hundreds of domestic flights and some bullet trains have already been canceled. Do watch out for those manufacturers as well, because automakers like Toyota, Nissan halting some of their plans. Asian chip makers also in focus. Of course, it's all about Nvidia. The results finally came in. They were beating on revenue forecasts, but really not beating by enough. So Nvidia took a hit in the after-hours session. We are watching for those chip makers across Asia. Of course, SK Hynix, TSMC, Tokyo Electron, some of those names to watch, Heidi.
As you said, Shery, not enough. It was a good set of numbers, right? And in fact, when we heard from the Nvidia CEO, Jensen Huang, he was very optimistic going into the nearer midterm forecast when it comes to supply, when it comes to the quality of their product and how he sees this AI boom story continuing to play out. But ultimately, the merely good results were just not enough for investors that were expecting the sort of stellar performance that perhaps we've seen in the past. The earnings beat was a modest one. Forward guidance perhaps left something to be desired as well. So all of this continuing to kind of consolidate these worries that the frothy valuations that we've seen across AI and broader big tech may be kind of difficult to justify. The question now, of course, is whether Nvidia manages to go back to its June peak. We're down about 10% from those levels, given the broader macro environment seems a little bit more challenging, and certainly the outlook for broader stocks, not just in the US, but globally, also seems to be challenging as well. So that is a setup as we are just minutes away from the start of major markets opening across Asia, looking to track that US session lower. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens after pressure in the after-hour session. Nvidia results in Haidi was a beat when it came to second quarter revenue, third quarter revenue forecast, also topping estimates, but the beat wasn't large enough, so that disappointing some investors.
Merely good, not stellar, Shery. That was sort of the takeaway there, right? And just adding to the, already compounding concerns about frothy valuations across the AI/broader, mega cap and tech sector. And I guess the question is whether this is just a blip in this sort of ongoing journey, or whether we start seeing stocks coming back to earth, and what could potentially replace Nvidia. If there is any other sort of thematic that could take the place of how influential this one single company has been.
And in the Asia Open, of course, we'll be watching those suppliers for Nvidia. Of course, we have the likes of TSMC, SK Hynix as well. But you're looking at the downside already in the Japanese Open. Of course, we had a little bit of weakness for the Japanese yen in the overnight session as well. Treasury yields rising, the dollar gaining ground, and the yen under a little bit of pressure, especially with the top BOJ official talking about having to watch market volatility for any BOJ moves in the future. But really, our eyes very much focused on those semiconductor names, especially when it comes to South Korea. Take a look at how the Korean market is coming online. The Kospi has really not done much in this week, but we're watching the names like SK Hynix, which really get more than 5% of their revenue from Nvidia. The top supplier for Nvidia here in Asia is also TSMC. We'll be watching for the Taiwan Open there. Samsung is also trying to really sell more to Nvidia as well. We're seeing that downside pressure of SK Hynix more than 6%. 6%. Samsung Electronics more than 3% at the moment. But we're watching the Korean won, which is also weakening against the US dollar. Heidi.
Taking a look at the first sort of couple of minutes as we get into the staggered session here in Sydney, and of course the relatively sort of low correlation to big tech names could be something of a benefit for Australian stocks, given that we have seen just that sort of commodity story, the recovery that we've seen across the miners, even against the backdrop of structural weakness from China, the pretty resilient numbers out of the likes of Fortescue, as well as BHP this week, really lifting the broader markets here in Australia. But take a look, a little bit of weakness there as we head into the open. Of course, most of that market's still sort of just waffling online, if you will. The Aussie dollar is holding pretty steady, 67.86. 68 is kind of the test level that we're seeing to see if we kind of have that further endurance and the next leg up for the Aussie dollar, given that we have seen that iron ore story kind of hold up okay, perhaps surprisingly resilient despite the steel mill situation that's ongoing in sort of the Chinese steel mill story as well, right? Taking a look at treasuries as well, we're holding a pretty kind of solid auction demand levels at the moment. That is largely still driven by the Fed story, of course, but the prevailing story at this point, of course, is what we're seeing from Nvidia, what it means for the broader AI story and these valuations across tech mega caps. We did hear exclusively from the Nvidia CEO, Jensen Huang, who really earlier brushed off these concerns over admitted production snags. The highly anticipated Blackwell chip, of course, was front and centre in their set of numbers. He told us that they're ready to ramp up production.
We're going to have lots and lots of supply, and we will be able to ramp starting in Q4. We have billions of dollars of revenues, and we'll ramp from there into Q1, into Q2, and through next year. We're going to have a great next year as well.
Well, let's bring in Bloomberg Intelligence Senior Analyst Kunjan Sobhani. Kunjan, great to have you with us. And sort of, you know, the sort of prevailing sentiment seems to be merely good, was not good enough, right? After so many stellar beats from this company, was this a surprise to you that investors didn't feel like this was enough?
It wasn't. We were sort of expecting it and called out in our preview. I mean, look, their own spectacular track record recently is becoming their biggest sentiment headwind. Fundamentally, this was, again, a solid quarter. The demand tailwinds continue to stay strong. This past earnings season, we saw most of its largest customers beat on their CapEx guidance for the year and out years. The estimates for those CapEx spending have continued to increase. And we have been aware of the Blackwell delays for the past 4 weeks. Of course, they were not reflected in the most up-to-date estimates yet. So we don't think this was a major surprise.
What moving forward? If we're seeing this beat being smaller and smaller, what are the concerns right now that this AI optimism might remain? And what does that mean for supplies out there when it comes to Nvidia?
Again, like in terms of AI optimism, we keep a close eye on demand signals, especially from the large customers. If we don't see any pause or any slowdown talks from them, which we have not seen yet, there are no concerns there. On the supply side, we think this is merely a timing issue. This pushes out the stronger Blackwell ramp, which could have started earlier in the year if nothing went wrong, out to 25. So it creates even a more likelihood of upside to the 25 numbers. And again, the key point to remember here is there is no alternative right now at scale versus the Blackwell, what you can get for the customers. So the customers are either have to make a choice of waiting for the Blackwell shipments or consuming what's available right now from the Hopper series.
Yeah, and Kunjan, we did hear on exactly that efficiency, right, from Jensen Huang when it comes to just how much, more attractive the Blackwell was versus a Hopper. Take a listen.
Well, the most important thing that we do is increase the performance and efficiency of our next generation. So Blackwell is many times more performant than Hopper at the same level of power used. And so that's energy efficiency. More performance with the same amount of power or same performance at a lower power.
So the new Blackwell platform clearly is front and centre here. Does that continue to sort of drive the upside narrative, if not, if we are in fact getting to kind of the bottom of this hype now?
Well, definitely the Blackwell ramp in calendar 25 will be a key driver that could make or break this AI optimism, especially for Nvidia. So that remains to be seen. Other than that, a few other key things that validates demand broadening outside of the large cloud players is one, when you look at their percentage revenue contributed by the cloud service providers, it at its low that it has been in the recently at 45%. That means companies diversifying out of just the cloud players. And secondly, this is the first time we saw the US sequentially revenues actually decline slightly, low single digits, which we saw rest of the world, including China, increase significantly. What implies that there's a significant demand, pent-up demand, which was not being served due to Hopper being supply constraint, is now getting served, and the demand is increasing in the broader world, not just limited to the US.
Kunjan Sobhani, Bloomberg Intelligence Senior Industry Analyst, with the latest on Nvidia earnings as we're trying to digest that market reaction. Let's bring in our next guest, who remains overweight on U.S. equities, including the broader tech sector. With us now is Audrey Go, Head of Asset Allocation at Standard Chartered Wealth Management. Audrey, always great to have you with us. Is this just a blip when it comes to market sentiment because of Nvidia's results?
Yeah, we certainly think so, because if you look at our overall portfolio construction, we still keep a modest overweight when it comes to global equities and certainly US equities as well. And let's also not forget, since the beginning of this year, or even since the market's peak in the mid of July until now, actually markets have staged a very stellar rebound. So some profit taking, ahead of also weaker seasonality in September, together with ongoing sort of election risk coming through in November as well. So some sort of money being taken off the table by investors is entirely not a surprise to us. And we do believe that post this weaker seasonality in September, we can probably see markets tracking higher as well. Of course, barring no major surprises in the US elections as well.
We saw the S&P 500 at one point have one of the worst days since the meltdown that we saw earlier in the month. When it comes to levels of volatility, how are you hedging?
Well, I think if we look at what happened in early August, a big part of it is probably due to technical related positioning, quite technically driven actually. So from our perspective, this is likely to be temporary. But having said that, also because we are in a weaker seasonality in August and September, and typically that's when traders go on vacation, market liquidity has also been quite thin as a result of that, and that really exacerbated market actions. So from our perspective, we have been advising clients is really for them to maintain a balanced allocation, because our major base case for the macro narrative is that we're still likely going to see a soft landing coming out from the US, and then by extension the global economy as well. And the Fed is set to cut interest rate come September too. So that should also be a tailwind for markets, because after rates being high for the last 2 years, finally they are coming down, and that should be a support for valuation, and especially for growth sectors like technology as well.
Audrey, much has been made of just the outsized influence of Nvidia as one single company, one single stock on the broader, not just tech sector, but broader markets, right? And that goes to sort of our question of the day from the MLive blog, which is there something else that could potentially replace Nvidia in terms of its influence and ability to lift broader market confidence? Historically, we've sort of tried to make comparisons to the likes of Cisco, but there are few comparisons, right? What do you think, or is this sort of an idiosyncratic story within Nvidia?
I do think that there is a network effect stemming from the positivity or even this very strong growth tailwinds coming from Nvidia as well. Because if you look at the entire AI story, we are talking about right now demand coming from data centers, upscaling by corporates into AI-enabled related platforms and computing power. But this is also likely to spill over to the consumer side, because if you think about it, perhaps the next leg of tailwind will stem from AI consumer-related replacement demand. For example, if we replace from traditional PC to AI-enabled PC, or even regular handsets, handphones to AI-enabled handphones as well. And I think this is still at its nascent stage, given that AI have only been around with us for the last maybe 2 years in terms of broad-based mainstream media. So we do see that that's going to likely to be a quite sustainable sort of circular tailwind for now. But of course, when it comes to investments, valuation also quite matters. And I think for many investors today, actually, it is not so much the growth story that they have concerns about, but really in terms of really how much they are paying for this growth story, which they don't really, which I think if you look at tech stocks today, some of them, their valuations are indeed pretty lofty.
You've talked about the laggards, of course, and the sort of optimism over the broadening of this market. Where do you see opportunities in those that have yet to perhaps catch up?
So I think in the near term, we can see the likes of financials as well as some of the sectors which have lagged, for example, healthcare doing better. I think it's a function of market rotation, because back in the mid of July as well as early August, when we have seen investors actually rotating out from tech, which are quite well owned and also well bought, into the laggards such as energy, financials, or even small caps for that matter. And to me, I think that's a sign of healthy market dynamics, because typically speaking, if one is expecting an impending recession to come, then those wouldn't be the natural candidate to rotate out of tech into. Actually, one would probably go into, maybe stay in tech and perhaps add on some of the defensive segments of the market as well. So we are actually quite gratified when we see some of the rotation into the likes of small cap or even the energy sector, even financials, which have been lagging year to date.
Audrey Go, Head of Asset Allocation at Standard Chartered Wealth Management. Great to have you with us. Take a look at some of the big movers in the early Asian session, because it's really all about those chip makers and, of course, those suppliers to Nvidia. SK Hynix, for example, gets more than 5% of its revenue from sales to Nvidia, and we're seeing that downside of more than 6% after Nvidia sank in the after-hours session despite the revenue beat. Samsung Electronics also falling more than 3%. It's the worst day since August 5th. Remember August 5th, when we had that really big meltdown across global financial markets with that unwind of the yen carry trades. Tokyo Electron also falling in sympathy, 2.7% at the moment. Take a look also at some other stocks across Japan, because we do have this typhoon barreling through Japan, especially near the island of Kyushu. Typhoon Shanshan has already impacted some of these companies, including Japan Airlines, ANA, having to halt hundreds of flights. Also, railways having to halt some bullet train services. And of course, we're also watching those manufacturers like Toyota, Nissan that had to halt some factories, Heidi.
Yeah, watching airlines when it comes to this part of the world too. Qantas seeing the impact not of natural disasters or weather events, but of its own sort of reputational undoing. Brad, full year adjusted net income there was expected to decline. We saw the profit falling as the airline really investing more to repair those reputational issues. We also saw a decline more broadly when it comes to airfares as well. So that underlying profit falling 16%, perhaps not quite as bad as expected, but coming in at $1.4 billion. So more or less in line with analyst expectations, but a slump in international passenger revenue was flagged for the second half of 2024. We're seeing, of course, gradually but steadily capacity coming back online following the pandemic. More ahead on the Asia trade. This is Bloomberg.
China and the U.S. say President Xi and Biden will talk in the coming weeks. It follows the trip to Beijing by U.S. National Security Advisor Jake Sullivan. This ascension, of course, stem more of a range of trade and geopolitical concerns. China correspondent Min Lo joins us now from Hong Kong. Min, any clarity on how and where these talks could happen?
Yeah, the two countries are in discussion to set up these talks. No idea when or where yet. But as of now, President Biden is the only president since Jimmy Carter who has not yet visited Beijing during his term in office. So could this be his first and last time to visit Beijing before the end of his administration? Is a big question. And if not, there are still a couple of opportunities for them to meet, for example, in Brazil during the G20 summit or in Peru during the APEC summit. And this is going to be quite an important meeting to cap off the end of his administration, because this is a time when both countries will want to ensure that the waters remain calm, that there are no crises that could brew over the next few months, because that will really take the momentum into the next administration and really set the rules for the next 4 years. A very important outcome from the marathon meetings that Sullivan has had with Wang Yi is that both countries have now agreed to deepen military-to-military communications down to the theater command level. And this direct line of communication is extremely important to avert any potential crisis and flashpoints like the South China Sea and like the Taiwan Strait as well. China has been calling on the U.S. to stop arming Taiwan, to stop condoning the so-called violation of the Philippines in the South China Sea. But of course, Sullivan has been reiterating its concerns, the U.S.'s concerns of stability in this region, also saying that the current efforts to prevent high technology from undermining U.S. national security, those are important as well, even as China and Wang Yi is calling on the U.S. to stop curbing China's legitimate development rights here.
John Podesta, who's the US climate representative, is headed to Beijing next week.
That's right. This is also one of the outcomes that have come out of those talks as well. The two countries agreeing to cooperate on climate change as well as anti-narcotics and enforcement and artificial intelligence. So Podesta is going to travel to Beijing to meet with his Chinese counterpart. The goal is to discuss how to reduce a range of greenhouse gas emissions beyond just carbon dioxide. They're also going to discuss a thorny issue of how to fund more money, send more funds to developing countries to help protect them against climate change and to help them with their energy transition. And again, Beijing is expected to do a little bit more, even though they're holding on to that status as a developing country. The two countries also set to make new pledges for 2035, and this is where China also again faces more pressure to do a little bit more, given that it is the largest greenhouse gas emitter, even though it has already been making great strides in transitioning towards green energy, for instance. And again, timing is extremely critical, coming just ahead of the U.S. election, where there's going to be uncertainty about what Trump would do if he wins the presidency. Would he be pulling out of the international climate change agreement? So that's where the two sides are also working to deepen non-governmental cooperation on climate change as well.
China correspondent Mimilo there. Sticking with China, more earnings results coming through, including in the EV and tech space. Let's bring our reporter, Annabelle Jewellers. So let's start off with BYD. Big jump in second quarter net income.
Yeah, that's right. It actually rose 33%. And then we also saw the overall picture for revenue as well, I should say, rising 26%. But broadly, the results were solid for the company. And we were sort of expecting that going into the numbers. But one of the key things that was really going to be the question was, what were they going to do about their overseas expansion plans? Would they be looking to push ahead aggressively, even in the face of tariffs from the likes of the EU, the US, Canada? And it does appear that, yes, they are going big on the international expansion. And we actually had an interview with the Executive Vice President, Stella Lee, just ahead of the numbers, asked about that. And ultimately what it boiled down to with a few different questions and a bit of prodding, it sounds like. But we did get to the point that they're expecting for overseas sales to account for 50% of their broader market. We just don't know the timeline for that exactly.
We've been also watching Meituan very closely. The Chinese food delivery company just upgraded to overweight at Morgan Stanley. How good were their results?
Meituan's results were actually solid. They really stood out, especially in a wave of Chinese commerce or consumer-facing companies that have really been facing those twin headwinds of not only the economic malaise, but also very stiff competition in the space. But it seems like Meituan is managing to fend off both of those threats for now. We actually saw better numbers coming through for the broader business, but the big focus on the core local commerce segment, and we saw that gaining 19%. So the expectation had been for 17% growth. growth. Of course, the company isn't just resting on its laurels here. We actually had a warning coming from its founder talking about or telling investors not to get overly optimistic. Going into the second half of the year, they're still expected to keep optimizing their operational efficiency. But certainly, as we say, yes, this company doing better than others, and also managed to approve a $1 billion buyback, or room to buy back shares for up to $1 billion. And you can see here the results of that, because Meituan's shares have been outpacing the gains we've seen for Alibaba, JD.com over the course of 2024.
Our tech reporter Annabelle Drillers there with the latest with those earnings coming out of China. We have more ahead on the Asia Trade. This is Bloomberg.
Latest from the corporate front, French prosecutors have charged Telegram CEO Pavel Durov with complicity in criminal use of the app, including for drug trafficking and sharing images of child sexual abuse. They say Telegram also refused to help run wiretaps on criminal suspects. The billionaire has been ordered to post €5 million bail and banned from leaving France. Telegram didn't immediately respond to a request for comment on the charges. Berkshire Hathaway has become the first US firm outside the tech sector to top $1 trillion in market value. Warren Buffett's conglomerate has rallied this year on strong insurance results, outperforming the S&P 500 with a 30% gain. Berkshire joins an exclusive club dominated by tech giants including Alphabet, Meta Platforms and Nvidia. Shares of Salesforce jumped in extended trading after the company reported a strong profit outlook. The maker of customer management software sees profit exceeding $10 per share for the fiscal year, topping estimates. Salesforce also announced that CFO Amy Weaver will step down from her position once a successor is chosen. HB, though, slipping in extended trading after cutting its full-year profit outlook on a continued downturn in its printer unit. Printer supply revenue is seen as HB's leading profit driver. The disappointing forecast eclipsed a first revenue gain in 2 years, suggesting an end to a long slump in demand for personal computers. Take a look at how
markets are trading at the moment. Yeah, take a look at Japan, Haidi. Nikkei down 0.6%. Of course, we're following what's happening in the semiconductor side of things. Tokyo Electron falling alongside, of course, the big ones in Korea as well, like SK Hynix, Samsung, because of Nvidia results. And, of course, all to do with what's happening in that AI investment side of things, and perhaps skepticism that some of these stocks may have gotten overstretched. But we're talking about the tech sector leading the declines in the Japanese equity market. Same thing sort of for most of the markets across Asia right now. The Japanese yen, a little bit of gains. We are headed for the second month of gains for the Japanese yen against the US dollar, which is a big thing given that we were at that 160 level just in July. But take a look at how Tokyo is looking right now. We're expecting rains and showers as we're headed for that Typhoon Shanshan to really barrel through the country. It's really around the southern island of Kyushu, and some of those airlines that have been hit, manufacturers that had to halt the operations, not to mention even election campaigning for the leadership of Japan's ruling party has been halted. This is Bloomberg. Nvidia tumbled in late trade after delivering an underwhelming forecast that admitted production snags with its highly anticipated Blackwell chips. In an exclusive interview with Bloomberg Technology, CEO Jensen Huang told us about the government deals driving so-called sovereign AI.
It's not necessarily, sometimes it's deals with a particular regional service provider that's been funded by the government. And oftentimes that's the case. In the case of Japan, for example, the Japanese government came out and offered subsidies of a couple $2 billion, I think, for several different internet companies and telcos to be able to fund their AI infrastructure. India has a sovereign AI initiative going, and they're building their AI infrastructure. Canada, the UK, France, Italy. I'm missing somebody. Singapore, Malaysia. A large number of countries are subsidizing their regional data centers so that they could become able to build out their AI infrastructure. They recognize that their country's knowledge, their country's data, digital data, is also their natural resource. Not just the land they're sitting on, not just the air above them, but they realize now that their digital knowledge is part of their natural and national resource. And they ought to harvest that and process that and transform it into their national digital intelligence. And so this is what we call sovereign AI. You could imagine almost every single country in the world will eventually recognize this and build out their AI infrastructure.
Jensen, you use the word resource, and that makes me think about the energy requirements here. I think on the call you talked about how the next generation models will have many orders of magnitude greater compute needs. But how will the energy needs increase, and what is the advantage you feel Nvidia has in that sense?
Well, the most important thing that we do is increase the performance and efficiency of our next generation. So Blackwell is many times more performant than Hopper at the same level of power used. And so that's energy efficiency. More performance with the same amount of power, or same performance at a lower power. And that's number one. And the second is using liquid cooling. We support air cooling, we support liquid cooling, but liquid cooling is a lot more energy efficient. And so the combination of all of that, you're going to get a pretty large step up.
Nvidia CEO Jensen Huang there, speaking exclusively to our Bloomberg technology co-anchor Ed Ludlow a little bit earlier. Let's bring in Olivier Blanchard, who's a research director at the Futurum Group. And Olivier, great to have you with us. And you said there was no room for error in these numbers. There wasn't really error, though, was there? It's just that investors wanted something that was more stellar and more of a blowout.
Yeah, thanks for having me. I'm wearing Nvidia green today for Nvidia Day. No, it's interesting because Nvidia delivered, right? Actually, they over-delivered. They came in ahead of expectations, so they're doing what they need to be doing, and still investors didn't quite reward them with the reaction that I think Jensen probably expected, and I think you can sense his frustration at the beginning of that interview for sure.
Were you surprised by any of the commentary or the forecasts on Blackwell? Because it also feels like investors were maybe getting way ahead of themselves on the timing for that.
I think that's what it is. I think in a way, Nvidia is a victim of its own success, in the sense that it's grown so quickly and so well. It's exceeded expectations repeatedly, that it sort of trains investors to expect that much additional performance out of it. And what we're seeing is the market is sort of adjusting. So there's a couple of things going on. One, that type of growth isn't necessarily realistic or sustainable in the long term. Two, it's not necessary in the long term either. But three, there are also supply constraints, right? And so Nvidia can only grow as quickly as its supply allows it to. And Jensen pointed out in the interview that obviously supply is improving, otherwise they wouldn't be able to grow at all. But there are structural limitations to the pace of growth past a certain point. And so I think we're bumping into a little bit of that, even though I think Nvidia is faring better than I expected, even on that point. And you may ask me about demand, and I think it's more of a supply issue than a demand issue. I don't see demand slowing down. I just see the ability to respond to demand becoming less and less agile.
I was going to say, what does the demand picture look like? And if demand is as solid as you say, does that mean just more upside for companies like Nvidia and its suppliers as well?
That's correct. And so it's good news for everybody, because obviously as Nvidia grows and expands its offerings and demand continues to grow, it also allows the AMDs of the world and other competitors to come in with their own solutions. And AMD gaining market share, as it probably will over time, isn't necessarily a negative for Nvidia either. I think it's a more story of silicon diversity and being able to create chips that are more custom or semi-custom for types of applications that will grow out of the next 2 to 3 cycles. So I think it's all upside.
Yeah,
but we're still dealing with some supply constraints. Yeah.
Yeah, we're expecting Samsung's high-tech chips to actually get certification from Nvidia. We have seen Samsung sort of lag SK Hynix. We know that TSMC is also a top supplier for Nvidia. What will the competition landscape look like for these suppliers?
Well, they have a tough few quarters ahead of them. I think Nvidia is still the company to beat in many ways, and I think the point's been made already. Nvidia today is to the AI the AI opportunity what Tesla was to the EV opportunity at the very beginning of the cycle. And so they have a lot of ground to cover. Nvidia obviously has a huge lead on everybody else. They also have an impressive software moat that's going to be difficult to overcome. But we're talking mostly about GPUs, right? There's also CPUs that are very important. They constitute about 20% of the chip market for AI inference and training. And then on the device side, you also have NPUs, which are carrying a lot of the load so that GPUs don't have to. So the silicon diversity issue is going to open up a lot more opportunities for other companies, and also on price, as hyperscalers and other companies are looking to improve their margins. They're going to start looking at offerings and options that are maybe a little bit more price centered than Nvidia.
Olivier, you sort of refer to, or allude to the sort of existential crisis that investors are dealing with at the moment in terms of trying to work out when we're going to see that transmission, right, of the AI boom into sales being lifted at these companies, efficiencies. And we did see a little bit of upside for Salesforce, for example. Do you think the market is framing this in the correct way? Because, as you say, companies like Nvidia are looking at the long term. What should we be expecting in terms of when, the adjacent companies like the software makers and corporates start sort of seeing that impact?
Right. We should start seeing that at the beginning of the coming year and the beginning of 2025. I think it's the explosion of demand for AI capabilities has sort of outpaced the developer side of it. So the software is coming. It's just we haven't necessarily seen the killer apps in a lot of those markets. But what's really interesting and encouraging is that every single industry, whether it's research, healthcare, finance, education, applied sciences, every single industry is invested in this. So, we're seeing with Walmart, for instance, focusing on AI as well. Going to see this sort of like long tail of applications enter the market. But I think it's going to take a few cycles to start maturing and to start going in the direction that investors can understand. Right now, it's still very much a chips hyperscaler and sort of like building out the AI infrastructure play for the next probably 2 to 3 years.
Olivier Blanchard, good to have you with us, research director at the Futurum group there with. What to expect from Nvidia and from the chip-making sector? Take a look at how the semiconductor manufacturers are faring right now in the Asian session. We're seeing Samsung Electronics see the biggest loss since the market meltdown on August 5th, of course, earlier this month. SK Hynix is also losing more than 4%, at one point losing almost 7%. Of course, SK Hynix, one of the big suppliers for Nvidia, 5% of its revenue coming from Nvidia. Tokyo Electron down, Renesas also down. Haidi is really a down day broadly across markets.
Yeah, take a look at how we're faring in Australia. Of course, that sort of relative decorrelation with big tech may give a little bit more of a help in terms of limiting the downside. But we are seeing some of these earnings stories really failing to lift these stocks. Right, we're watching Wesfarmers. The net income for the full year actually meeting estimates. The retail segment was expected to sort of provide a bit more support to those full year numbers. Air New Zealand, that was a full year net miss there, coming in at about 146 million Kiwi dollars for the net income. So just a slight miss there. And also watching Qantas as well. We're seeing a bit of a flip-flopping when it comes to Qantas shares at the moment. The outlook, of course, in question, as well as fuel costs coming in slightly below expectations. But of course, for Qantas, the profit falling on some of these reputational issues that the airline continues to grapple with. Our Bloomberg News business reporter Angus Whitley has been looking at this. And Angus, you've just gotten off the conference call as well. What did we hear?
Yeah, I think as you said, Heidi, the headline numbers tell us a couple of things about the current environment, not just the past year. Earnings down 16% to a little over 2 billion Australian dollars. That tells us that Vanessa Hudson's still picking up the mess, or picking up the tab, I should say, for the reputational mess left by her predecessor. That's impacting earnings. And also we're seeing fares moderating, and that's what she said on the call, which I just got off. She said international fares particularly are going to moderate this 12-month period out to June 25, and that's as more capacity floods back into the international market. And we're seeing Qantas flood international routes with more planes, and competitors are doing the same, and that's good news for passengers when we've seen international fares moderate, and that's going to continue, perhaps easing off towards the end of the 12-month period out to June 25. But it all tells us a story about Hudson's sort of challenges. She's trying to reset the pendulum back towards passengers and staff, and perhaps away from investors and shareholders who are probably prioritised, it's safe to say, under Alan Joyce. The question is, can she keep up the margins and the returns to investors while taking care of passengers a bit better?
Yeah, particularly in sort of a broader backdrop of softening demand, right? Is that sort of playing into the equation, particularly as with cost of living and some of these sort of, household pressures? Are we expecting Australians to travel as much as they typically love to?
Yeah, it was interesting. Hudson had a few words on that in the call. She was asked whether demand was holding up. She said it is, it's stable. And she even said that customers seem to be prioritising air travel over other discretionary spending during a cost of living crisis. So she said that trend really underpins her what she described as an optimistic outlook for the next 12 months. And as you said, the stock not doing huge amount this morning. It's swinging sort of a few cents up and a few cents below. It was about 1% up last time I looked this morning.
There have been a lot of calls for broader competition in the markets, given, of course, the dominance of Qantas. What are we seeing on that front, and what could the outlook be then for Qantas?
Yeah, Qantas, of course, the dominant airline in Australia. It's got 63% of the domestic market when you include its low-cost division, Jetstar. And we've seen just last month the collapse of regional airline Rex in Australia, and that was the fourth, at least the fourth Australian airline to fail in as many years. And that's, I suppose, reignited the debate about Qantas's strength in the market, its grip on the market, and the degree to which competitors can flourish and challenge Qantas locally. So, that's not going to go anytime soon, and the government is changing the way slots are allocated at Sydney Airport. And the way slots are allocated at Sydney, which is Australia's main gateway, is probably the most effective lever to pull when it comes to letting airlines challenge Qantas, because if you get the right slots at the right time, then you can start attracting passengers. And one of the reasons why Rex failed, at least in the major state capital routes, because it didn't have the right slots that it wanted between Sydney and Melbourne. So that's one to look out for. And also, will we see Rex back? In what form? Rex is the local regional carrier, has been for more than 20 years, currently in voluntary administration. Administrators looking for a buyer for Rex. So that'll be interesting to see where Rex passengers end up. Will it be Virgin Australia? Will it be Qantas?
Bloomberg News business reporter Angus Whitley there, in fact, will be speaking to Qantas' regional rival. The CEO of Air New Zealand joins Bloomberg after their full-year profit missed estimates. Greg Foran joining us on Bloomberg Markets Asia on the times on your screen. This is Bloomberg. We're bracing for Typhoon Shanshan. We're not really seeing that much rain here in Tokyo, but we know that it's going to barrel through the southern island of Kyushu. The system is currently equivalent to a Category 2 hurricane. We've already seen some disruptions in airlines, railways, also some manufacturers. Bloomberg Intelligence now saying that the typhoon could be costing Japanese insurers 100 billion yen or more and put the earnings of some companies at risk. Asia insurance analyst Stephen Lam joins us for more on this. So how would the losses from this typhoon compared to previous ones in recent years, Steve?
Yeah, hi, Shery. Good morning, everybody. And Haidi. So I think what we're looking at here is that this one is going to be close to Namodo in 2022, mainly because it's hitting the similar region called Kyushu in southwest of Japan. Now, based on the current images that we've seen and the data that we're looking at, the wind speed is actually quite strong. So we're talking about 180 kilometers per hour to be exact. That's sort of a borderline of Cat 3 in the hurricane scale. The other things that we're looking at is the amount of rainfall. I think that could be a concern because of the amount of rain that can dump in the next 24 hours or so. So to give you some perspective, anywhere about 600 millimeters in a 24-hour period is considered very severe. Imagine back in last year in Hong Kong during the black rain time, we definitely recorded over 600 millimeters of rain in a one-day period.
What should the public be looking out for in terms of impact and potential damage over the coming days?
Yeah, so I think the track is quite important as well. What we are seeing at the moment, right now it's focusing on it made landfall in the Kagoshima prefecture, so with a population of about 1.5 million people. Kyushu altogether is about 11.5, so that's about 9% of the Japan population. But at the moment, it seems like most of the wind damage is going to be focusing on Kagoshima prefecture. Like I said, flood damages could come in that prefecture along with Miyazaki. So combined together, we're talking about a few million populations in that area. The other things of concern is definitely the duration of the impact. This storm is actually quite slow. It's only moving about 15 kilometers per hour. So the longer it stays, the more impact it could be.
I mean, there are so many natural disasters here in Japan, whether it's typhoon, earthquakes, tsunamis. What measures do these insurers have to withstand these losses?
Yeah, so actually, in fact, Haidi, Shery, the insurance companies have already budgeted a lot more for this year due to climate change and whatnot. In fact, earlier this year, there's a number of hailstorms that already jacked up the insurance claims around April and May timeframe. So this year is definitely going to be above the 10-year average. So the insurance company is thinking about 30% or more. Now, how are they going to buffer that? Luckily, the Japanese stock market has been pretty good, except some volatility earlier this month. But then overall, they're expecting really, really a lot of windfall in terms of equity gains for this year to shoulder some of the losses.
Bloomberg Intelligence Asia insurance analyst Stephen Lam there joining us. More ahead on the Asia trade. This is Bloomberg.
The made-in-China blockbuster video game Black Myth Wukong is smashing playing records, receiving widespread critical acclaim. But a list of forbidden talking points in the game, including spreading, quote, feminist propaganda, is sparking criticism. Bloomberg Opinion columnist Catherine Thorbeck joins us now with the latest. So, first of all, Catherine, what is this game? Because I'm not necessarily a gamer. And what exactly is the controversy here?
Sure. So this game, Black Myth Wukong, it's sort of one of the first made-in-China blockbuster games, and it's really immensely popular, and it's also really quite stunning. But some of the gamers outside of China, when they received the game, they also received this list of what to talk about and what not to talk about as they streamed it. And on this list of forbidden topics was, quote, feminist propaganda, whatever exactly that means. And that's almost sort of had an opposite effect in the West, where gamers are actually drawing a lot more attention to this issue. And it was sort of a curious thing to mention. You know, they didn't have to include that on the list of forbidden talking points, but as a result, a lot of people are sort of questioning why they did that and what exactly they mean here.
tell people not to do something will want to do it more. So tell us a little bit about what could be behind this whole idea of not wanting them to discuss feminism.
Sure. So the studio behind Black Myth Wukong, Game Science, there have been reports in the past alleging a rampant culture of sexism, including some very crude remarks from leadership at the company. And I should note that this company has not publicly responded to these allegations. But this issue is bigger than just this game studio. You know, sexism in gaming has been a big issue in China and beyond China. And so I think, you know, we shouldn't be discouraging these kind of conversations. You know, 45% of gamers in China are women. And so that's a very big potential customer base. So instead of, you know, trying not to talk about these issues, I think they should really be getting ahead of these kind of conversations.
So we know that Chinese state-backed news outlets are sort of constantly saying that the backlash is part of the Western DEI agenda. The fact that we're seeing this from tech companies, both inside but also outside of China, also sort of doing this, is this an indication of sort of trying to curry favour with regulators, with the government, after what's been a pretty difficult few years?
Right. So I think multiple things can be true here. You know, I think a lot of people in China really see this made in China game being so successful abroad as really a win for China. And even, you know, women gamers abroad, Chinese women gamers that I've spoken to have really been trying to celebrate this. And I think some of the backlash is, you know, some people are saying it's racism. But I do think, as I mentioned earlier, you know, half of gamers in China are women, and the rate of new female gamers in Asia is growing at almost double the rate of new male gamers. So I really think companies should be paying attention to this. And I think, like I said, instead of trying to sort of dismiss these concerns, you know, instead of trying to alienate sort of half the world's population, they should be talking about this.
Bloomberg Opinion columnist Catherine Thorbeck here with the latest on that story. That's it from the Asia Trade. The China show is next with the market opens there. This is Bloomberg.